Joining us now, our panelists. Colin Reed is the chair of the Economics and Finance Department at SUNY Plattsburgh, a business owner and Clinton County legislator. And Jay Bryan is a business and economics writer who just recently retired as a columnist with the Montreal Gazette. Welcome to you both. Thank you. Let's begin with the whopper of a deal in the works. Sorry, I couldn't resist. Everybody's been using that line for the past week or so. An $11.5 billion takeover of Tim Hortons by Burger King.
I'd feel
Tim
more
Hortons.
of a nationalistic twinge if it hadn't already been bought by Wendy's a decade ago and sold back.
Yeah, I think we remember that. Wendy's bought it, and so they spun it off a few years later.
Yeah, it did, the synergy just wasn't there. And I'm not clear on why investors think the synergy is there now with Burger King, which isn't that different from Wendy's, but they do. Maybe one difference is that Burger King has a young, very aggressive chief executive officer and has been boosting its stock market valuations very successfully for the last few years by cutting costs, and now they're getting into expansion mode. But I mean, there is a rationale. The rationale is that the fastest expanding portions of the fast food business are international, not the US, which is very, very well served with fast food outlets. And Tim Hortons is based outside the US, of course, in Canada, and has some international operations. And the second thing is that the breakfast end of things, coffee and donuts and sort of the Starbucks / Dunkin' Donuts spectrum of restaurants has been doing better than traditional burger restaurants. And Tim Hortons is right in that area. Might be good for Tim Hortons because Tim Hortons has been trying to expand in the United States for a number of years and has had some success, but not a lot, and hasn't been terribly profitable in the United States. I think that, like a lot of Canadian companies that operate in the consumer end of things, they might have underestimated the challenges of scaling into a market that's not only 10 times as big as Canada's, but probably 2 or 3 times as competitive as Canada's. So there could be something good for both companies. It's not clear, though, why this deal will really create a lot of new value, at least not to me.
There are a number of Tim Horton franchises along the northern border. Potsdam, New York, there's one on the SUNY Plattsburgh campus, a number in New Hampshire and Maine. But as you said, there was really going to be a push a number of years ago to try to get a lot more in the northeastern states, and that hasn't happened. A lot of people looking at this deal, though, and saying that Burger King is looking to move its corporate headquarters to Canada to pay less in taxes.
I can't help but believe this. That's got to be one component. There's been a dozen major corporations that have done that this year already. And while we're very familiar with the US tax system, which taxes worldwide income, most of us don't realize that us and Eritrea are the only 2 countries that do that. Most other countries work on a territorial tax system, so you pay basically the taxes for the profits you earn in that region.
So this is Burger King. About 75% of Burger King's business is overseas now. So they're paying on those profits in the US, but they would not in Canada.
Correct.
They might be paying or they might not, depending on whether they're repatriating them.
That's right, and that's the big issue. A lot of these companies are given an incentive to keep those profits abroad for as long as they possibly can, and use them to fund expansion abroad. For instance, if they then need to make a loan for further expansion, they can borrow on the U.S. operations and get a further U.S. tax deduction. So there's a tremendous amount of gaming with the tax system because of this strange anomaly in U.S. taxation code.
So if you didn't have the kind of deadlock that you have between Congress and the President, this would, I think, be kind of like a poster child for the need to create a more rational US corporate tax system, because a couple of analyses that I've seen say that Burger King is really not going to save any significant amount of tax by moving to Ontario. Maybe 1 percentage point it'll drop its effective tax rate, because no American corporation pays the nominal corporate tax rate of 35%. Everybody pays less than that because there's so many loopholes. Burger King apparently pays about maybe 27.5% and will pay maybe 26.5% in Ontario. So it's not so much the tax rate as the other issue that Colin focused on, which is flexibility. If you're making a lot of your money abroad, you don't have to worry about, we have to keep it in this pocket, because if we put it in that pocket, suddenly someone's going to ding us 35% on it. And that, you would think, would be kind of a flashing yellow signal that if a whole bunch of corporations are acting based on this strangeness in the corporate taxation system, maybe it ought to be changed. Unfortunately, the only reaction that seems to be coming out of the administration is to punish corporations for this kind of expatriation of their head offices, which is understandable. I mean, if they are based in the US and they still keep most of their head office employees in the States, why the heck aren't they paying US corporate taxes? But if the US corporate tax system isn't very rational, you can sort of see why they have an incentive not to.
And you mentioned that we heard from Bernie Sanders just a few moments ago, a little bit earlier in the program, saying that very thing, that the tax code needs to be rewritten, that he figures about 1 out of every 4 corporations in America are paying little, if any, taxes. And it certainly got his ire up, the Burger King deal. For some reason, this really has struck a nerve with a number of people. That
because you can do something about it, I think. If it's some pharmaceutical company and you don't even know what the heck they make, what are you going to do? You're sort of indignant for 10 minutes. But if it's a company where you take the kids a couple times a week, then you think, darn it, I'm not giving them my business anymore. And I have some friends in Boston and other American cities who feel that way and feel quite strongly about it.
And you had mentioned a number of corporations are doing the same, the tax inversion are doing the same thing, a good 24 of them, but many of them are pharmaceutical companies, healthcare companies, and people aren't as familiar with them. But
Walgreens wasn't so keen when it got some bad consumer
And that was about a year ago, right? Walgreens had talked about moving its corporate headquarters to Europe and then backed off because of the feedback.
Apparently.
But we do need to get back to the point where we're making good business decisions, not tax avoidance decisions. And so really the U.S. has to, I believe, align their tax policy to be more in line with what other nations are doing.
The Treasury Secretary admitted that you could have a pretty good corporate tax revenues for the federal government if you slash the rate all the way down to 20% from 35. But if you can slash the rate almost in half, almost in half and still have similar income, that shows you that the loopholes are out of control.
Yeah. And Jay mentioned how the growth is overseas for fast food, the fast food industry right now. There's also a lot of growth in the morning, as we've seen with McDonald's and Taco Bell. Their war going on right now. I think analysts say that that seems to be where there's the biggest growth right now for the fast food industry is the morning. So probably Burger King, one might figure, is looking at Tim Hortons as a way to try to get in on that.
I think McDonald's, for instance, really tries to market themselves as making very high quality morning coffee, trying to get on that Starbucks bandwagon. Burger King is kind of a little bit lower in the food chain of quality in fast food. Would love to have a little bit of instant cachet, I believe. Yeah,
Tim Hortons would certainly do that. Plus, Tim Hortons sold on grocery shelves, so Burger King would automatically find itself in supermarkets as well in that regard.
The funny thing is that Tim Hortons is a company that's not valued nearly as highly by the stock market as Burger King, but it's actually a much bigger company. It has about 3 times the revenue of Burger King, partly because of what you're talking about. They're selling a lot of coffee in supermarkets. They're selling a lot of coffee to their franchisees, as well as a lot of disposable coffee cups and a lot of other stuff that they can sell to franchisees. So they're clever guys. They're extracting a lot of money out of their franchise.
Well, there is a bidding war going on this week. Dollar General has upped its bid to buy Family Dollar. When we were together last month, we talked about how Dollar Tree was looking to buy Family Dollar, an $8.5 billion deal. And Dollar General, in the meantime, has stepped up now and has gotten into the bidding and has raised the stakes this past week, now offering more than $9 billion to try to gobble up Family Dollar. Dollar General is the largest of these dollar stores, these small box discount retailers, and they're trying to muscle in and buy up Family Dollar. Is this that lucrative of a market that they want to buy up their competition, or is this what do you make of them getting in on this now?
All I can think of is that they've eaten away a lot at the market that used to be owned by Walmart and to a lesser extent Target and Kmart and the others, by coming in right at the rock bottom end during a period of real economic distress. And maybe they've gotten to the point now where the expansion just isn't happening very much anymore because they've eaten away about as much as they can. The bigger discounters are beginning perhaps to react, and typically what happens when you come to a period of rapid growth, and these guys are used to living in an environment of growth, when it's not happening anymore, the other thing you do is you consolidate. You buy up your competitors and you try and slash costs.
And we've seen that Walmart and Target are both coming out with smaller size stores now. Is that to compete directly with these dollar stores?
I think that's the thing with the scale that people now expect often with one of these Walmart supercenters. You need population base of 80, 100,000 people to support that size. But one of these dollar stores can come in for a population base of just 5,000 people. They're really more taking out the old mom and pops and the small little local grocery stores and drug stores, and doing that in a pretty efficient model. We've got one coming in just north of us in small little village of Chazy. And
in fact, in this area, we've seen probably a dozen or more of the three chains opening here. Are they opening in communities, though, where the mom and pop stores have gone out of business and there really is nothing else there to compete against?
I think you are seeing that. If you think of some of these communities that have lost their mom and pop and the little corner drugstore, and they're still 30, 40, 50 miles away from the nearest Walmart, that's quite a hardship. And these companies seem to be going in to fill these voids.
Corporate profits surged last quarter. The U.S. economy showing some robust growth, putting the economic expansion sort of back on a steady footing as it heads into its sixth year now. Gross domestic product for the second quarter, I think you gentlemen predicted this last month, or when we were last together.
Right, the first quarter was a little bit slow, but we suspected there were some weather-related incidents in the first quarter as well, but also maybe a little bit of statistical anomaly. So often when you have an unusually low figure, the next figure is unusually high, and if you kind of regress or average between the two, it's about right.
So just above 4%, I think, for the second quarter?
Right, which is probably a little bit artificially strong. I think the more realistic growth is around 3%. But we did see a big increase in construction spending just today, and that bodes well. Our construction spending overall is now back to the level it was in late 2008. That creates a certain amount of problems, though, because we've also displaced an awful lot of workers from that industry. It's just almost wiped out, half the volume during the depth of the Great Recession. So now you have to either hire these people back or find replacement workers with that set of skills. So it could have a little bit of inflationary pressure on that sector if it continues to grow that quickly.
We're hearing from a lot of experts in finance sort of sounding the alarm about the stock market bubble. I guess they aren't necessarily warning of an imminent crash, but they're sort of reminding investors it's been, a good 5 years? And it's been a good run, and it may be time for a serious correction.
Bubble suggests that something's about to pop, and I don't think that very many of the more respected analysts are saying something's about to pop. But perhaps the most respected analyst of them all, Robert Shiller, the guy at Yale who talked about the kind of irrationality of the last stock market boom, the tech boom, in a book that was released within months of the crash coming in the year 2000. He's a big proponent of looking at company earnings multiples, which is a way of measuring how expensive stocks are, not compared with the earnings that you expect in the coming year, which is the way most investors do, but compared to the earnings that you have seen on average, adjusted for inflation over the last 10 years, because otherwise you're looking at a number that just jumps around so much that you're not sure how reliable it is. And using his cyclically adjusted price to earnings ratio, if you go back through history, you can see that it's only been at today's level 3 times. 1929, before the big crash, 1999, before the tech crash, and I believe it was 2007, just before the last very serious international securities crash. So that is highly suggestive that we're at levels that are risky. Doesn't mean that anything's going to happen this month or even this year, but it does mean that if you're deciding where to put your money right now, maybe the US stock market wouldn't be your first choice. Stock market might be okay if you look at some foreign stock markets, which are quite a lot cheaper, because bonds actually are not a very good choice either. Bond interest rates are really not at all attractive. But I think what people like Schiller are suggesting is not, oh my God, sell everything and get out. Just be very cautious. Don't have everything in one place.
I put a little bit of a different spin on it. I know that he believes that backward-looking price-earnings ratios are a little bit high right now, but a lot of the companies that we're reporting in that figures, I say over the last 5 years, have been doing a lot of write-downs, which have really hampered earnings, the appearance of earnings. Our employment costs are low, which actually is very good for businesses going forward because they can actually now produce more with less than they ever could before. But it's not so good for those underemployed that are trying to get back into the job market at the same time. But I do see, almost every every quarterly report, earnings are a little bit better than the last quarter for almost every company we're looking at. So I don't think the stock market is significantly overvalued. And we're having a little bit of corrections. For instance, we had some good data today and all week, and yet the stock market hasn't been rising dramatically. There's a little bit of profit taking, a little bit of kind of rationalizing, keeping a little bit of a plateau. You know, it's been trading in a pretty narrow range for the last 6 months or so, from 16.5 to 17.3 or so. So I think that it's finding a level of comfort which it can go on to. Mind you, I'm sure somebody's saying that in September of 1929 as well. So.
And in 1999. But I have to agree with you that there are analysts who disagree, and the only thing that I would worry about is that this cyclically adjusted number is a pretty solid number. It's not something that jumps around all the time, and it really is at very close to its highest level ever. So it's not just a little bit overvalued, it's very overvalued. On the other hand, if you look at a typical 1 year ahead price to earnings ratio, not too bad, not too much above an average level. So you know, you can make arguments either way, and you could also make the argument that interest rates are at record lows, and when interest rates are at record lows, then stock prices should be around record highs, because bonds and stocks are essentially the alternative investments that people can look at. When you can't make any money on a bond, then the stock market is where people go. I do have a nagging worry that when you have that cyclically adjusted figure as high as it is now, that it doesn't seem likely that the coming years are going to be very good years. It's entirely possible, however, that the coming years could be years when stock prices just sort of stagnate for a while and don't do too much, and maybe earnings will catch up and fix the price to earnings ratio that way, because after all, it can correct in two ways. You can have the earnings go up, or you can have the price go down.
Right. Let's talk a little bit about Europe. Until recently, it was debatable whether the economy was recovering. It seems that that's no longer a question. It seems that the recovery has pretty much stopped. The question now is the stagnation. With the stagnation, is it possibly going to develop into something worse? Can the European Central Bank do anything about this? Should it look at what the U.S. Federal Reserve did in the U.S. as far as bond purchases, or what's the?
First of all, there's a limit to what any central bank can do, because if the legislature doesn't move along with it, then things aren't going to get better very fast. We've seen that in the United States, which has been probably the most successful major economy because the Fed has been so active. But even with a very active Fed, with Congress doing basically nothing about spending money federally to help out the states, to help out with infrastructure investment and stuff like that, it's been a very painfully slow recovery. Better than Europe's, but not good. The problem in Europe is that not only do you have the central bank pushing one way and the legislatures and the executives kind of pulling back the other way because they're all so devoted to austerity, but the central bank in Europe is very, very restricted in what it can do. It's not like an independent Fed. It's very much tied to what the European the Commission will let it do, and essentially to what Germany will let it do, because Germany is the locomotive of the European economy. And amazingly, even in Germany, which is now shrinking for the first time, Germany's economy had been relatively impervious to the really bad stuff for the last few years. Now it's not impervious. It's stopped and it's shrinking.
And it's a big.
And the French economy, the second biggest one, has come to a dead halt.
Is part of Germany's problem the sanctions against Russia?
That will be part of Germany's problem. I don't think it's part of Germany's problem now. I think what Germany's problem now is that all of Europe, thanks largely to policies that have been forced on Europe by Germany, all of Europe is very, very sluggish, and there's only so much that a central bank can do.
I agree.
I don't really know how they're going to get out of this if they don't change their opinions.
I agree. Germany's really been holding back a good fiscal policy in Europe. The monetary authorities have been trying to do things, but not to the same extent as we did here. But you know, it's a tougher nut to crack. In the United States, you could look at it as, well, don't we have the same problem? If we had a really hot region doing very, very well in one part of the country, wouldn't we want to not develop an economic policy that might make their inflation worse? And there's a little bit of truth to that, but in this country, if it's really booming in the Carolinas, somebody doesn't mind going down from New York City or New York State to take a job in the Carolinas. But a Spanish or Spaniard is not going to go up to Germany to take a job. There's a lot stronger sense of nationalism, so they don't have that equalization. So if you have strong and poor and weak economies all in one economic union, there's really creates a sort of economic deadlock.
Not to mention the need to speak German fluently.
In Montreal, dozens of Montreal firefighters and municipal employees took their unhappiness to City Hall a couple of weeks ago, and things got a little out of hand.
Yeah, they vandalized City Hall to some extent, and they were caught on camera apparently, and there have been some people suspended without pay, and there may be some criminal prosecutions, the city says. Thank goodness the mayor is being firm about this, because what makes them unhappy is a deal that the province wants to impose on public service unions that would require employees to help make up the deficits in their pension plans 50-50, the 50-50 employees and employers. That's very unusual. For example, at my company, a big publishing company, the rule is just that any other big private company in Canada, if the pension plan is in deficit, it is the employer's job to make up the deficit, because after all, the employer manages the pension plan. If not directly, then the employer appoints someone who's going to manage it, so the employer takes responsibility for that. It's not clear how the province can just step away from that responsibility, and it's understandable that the employees are angry, but they're showing their anger in the worst possible way. That, you know, the policemen are showing up out of uniform. They're wearing things like, you know, pink camouflage pants. They're vandalizing police cars. Firemen are vandalizing fire trucks with stickers all over them with slogans about the pension negotiations. People are losing respect for these people, and editorial cartoonists are having a field day depicting policemen as clowns, because they sort of look like clowns in their new uniforms. So it's kind of a mess on both sides. I think the province is being unfair, and I think the employees are behaving disgracefully in trying to express their anger at the unfairness.
This would be a precedent. This has never happened in Canada, where a government has proposed having the employees share the burden of.
I don't know if it's a precedent or not, but it's certainly highly unusual. I know that in the United States, people have actually lost big chunks of their pensions in some municipalities. In Canada, you expect that if you have a government pension plan, that they'll stick to the rules and that the plan will be what it says it is.
And one other difference too, though, in Canada, the public service unions tend to be a little bit more militant. In the States, they haven't been. The strong unions in Canada.
Certainly in Quebec. Very, very militant in Quebec.
And the union leaders said they don't approve of the actions of the union members, but they say they understand why they're so angry over the proposals.
How convenient.
Last month, we talked a little bit about Bombardier and the C-Series having problems, and since we last talked, now more delays for the C-Series. A big order, one of the first orders coming next year has been put off.
Yeah, the launch order, and you know, on the one hand, I think about all of the other planes, from the Dreamliner to the gigantic Airbus 380, that have had enormous delays and problems and technical issues getting their planes going. And indeed, the 380 looks like it's not going to be a commercial success ever, even though it's been many years now. On the other hand, when I get away from that kind of business-oriented reasoning, a cold chill goes down my spine as a Quebec and Canadian taxpayer, because ultimately taxpayers are the final guarantors of Bombardier or of any big aircraft company. I mean, we can pretend that companies like Bombardier and Boeing and Airbus are private companies, but they're not. They're really state corporations in the guise of private companies, because they live through government subsidies. And we just have to hope in Quebec that the folks at Bombardier, who are pretty good managers, do have this program under control.
They're having engine problems that they need to now try to work out. Senator Chuck Schumer was here in the North Country this week, urging his colleagues in Congress to reauthorize the Export-Import Bank, which helps support tens of millions of dollars in exports at least two major companies in Plattsburgh, Swarovski Lighting and Platco Corporation, and in turn helps support hundreds of jobs in the North Country. For folks who aren't familiar, how does that work? That's basically a bank that helps foreign buyers buy American products.
Right, and it takes care of issues beyond just the cross-border kind of issue, but there's an awful lot of transactions costs and red tape with trying to do things across borders. So I think that the Export-Import Bank has had a very useful charge in helping smooth and pave that road through letters of credit and loans.
And that has to be reauthorized by the end of this month, and Congress doesn't right now show any great desire to do so.
Right, it's being caught up a little bit in almost the Tea Party agenda.
Yeah.
No government subsidies and
Exactly.
no large government agencies. And that's how this is viewed by some.
And they're quite right. It is a government subsidy to business, and if you hate the idea of big government, you can understand why you'd be against that. The only problem is that it's a little hard to see why the Tea Party wants to see America blow its brains out, because what they want to do is stop subsidizing American exports, but of course Americans have no power whatsoever to stop other countries from continuing to subsidize their exports, Canadian exports, French exports, British exports, Chinese exports. So you'll have foreign exports coming into the United States with that benefit of a bit of a subsidy. And American exports absolutely hamstrung, because this isn't so much a lot of dollars in the pockets of American corporations. It's more like an insurance policy that keeps them from being at risk of very serious losses if something goes wrong with the big export order. And if you don't have that kind of insurance, as it were, you don't really have much of an incentive to take those risks.
Locally, a beach party going on Saturday. The town of Plattsburgh, the city of Plattsburgh, Clinton County, you're a member of the Clinton County Legislature, all getting together at City Beach and the Crate Civic Center in Plattsburgh, encouraging people to come have a fun day at the beach. The beach closed on Labor Day, but will reopen for folks on Saturday. But the idea behind it is to have people give you ideas, recommendations on what they'd like to see as far as developing that beach, because the three municipalities or forms of government basically are recognizing that that's a critical piece to development here in the area.
Right, not necessarily just that beach, although that's certainly the highlight. We've got a very long shoreline along our lake and our rivers and other lakes in the area as well that we could probably celebrate a little bit more. After all, this is the 6th largest lake in the country, and perhaps the largest lake fully self-contained, or maybe
And a
second
huge
largest
draw
lake.
for Canadians from Quebec and Ontario.
Yes.
It is. A one time, 20, 30 years ago, there'd be lineups right up and down Route 9 for miles for people trying to get to that beach. So there's an awful lot of potential. Many communities with less potential than ours have figured out ways to really market their beach and do private-public partnerships, make it a lot more accessible, do boardwalks, these sorts of things. So I think getting the various municipalities together to recognize this is really a shared asset and trying to figure out how we can polish that gem up a little bit is part of the exercise.
The Chamber of Commerce has a study that's been done for the past several years looking at how to develop that area and to make it a tourist destination, playing up the military history in the region, playing up the nice beach facilities. This will build on that, and there's also separate business leaders in the community who have pitched ideas in the past about creating a pier and restaurants and an amphitheater.
That's right. The beach and lakefront access is an important part of the strategic master plan for this area, along with history and agritourism and that sort of thing. And there's some roadblocks that we've been using some grant money to try to overcome, doing some of these initial phase 1, phase 2 environmental studies to make sure we can give to the developers or the private-public partnerships a green light to proceed.
People probably wonder, is the funding there, though? If you come up with ideas on developing that, creating a pier or a marina, developing that beach, will there be the funding there to make it a reality?
I think that if there's the potential profits there, the private sector will make sure the funding is there. If this were to be simply a public project in these days of lean government and taxes and that sort of thing, I think it'd be a much more difficult to sell.
Down the road, would they hope that that might be a project that would be covered by these regional economic development councils that are around New York, and the one in the North Country that's been able to secure hundreds of millions of dollars in funding over the past few years?
It could, and the Regional Economic Development Council has been helping to do some of these initial studies to lay the groundwork. And as you know, the REDC is more inclined to try to spur private development than simply public largesse. So I think there's a lot of potential for that.
And finally, we had to touch on this before we go this week, something right out of the Jetsons. Google now says it is developing airborne drones capable of flying on their own and delivering anything from candy to medicine. They join, of course, Amazon in this brave new world. How realistic is this that 10, 20 years from now, you could have a package delivered within 2 hours after ordering it on the internet from either Google or Amazon?
Not too unrealistic if you live in the Australian outback. That's where they're testing
That's
it.
where it's
They've
being
dropped
tested.
some veterinary medicine out to, I guess, sheep stations, and they've dropped some dog treats to a lucky dog someplace out in the Australian countryside. But I think the Federal Aviation Administration might be a little bit more skeptical about having people dropping stuff in downtown Plattsburgh, or even more so downtown, New York or Rochester.
And the FAA is still trying to scramble and develop guidelines right now within the next year or two, and primarily starting with the bigger drones, and then working down to the smaller drones that might be doing deliveries like this.
I hope they're cautious, because the idea of having a 50-pound drone with whirling propellers crashing into my kid's pool party in the backyard isn't that attractive to me.
Or a few guys with beer shooting pizzas out of the sky.
That's right.
Right. Although you would have that package in potentially 2 hours.
Might be lucky, yeah.
In this must-have day and age that we're in. All right, well, gentlemen, thank you very much. That's going to do it for this week and for this edition of Mountain Lake Journal. We appreciate you tuning in and watching. We'll see you again next month.